Over the past decade, the number of Corp Fin staff comment letters on Form 10Qs and Form 10Ks has gone down markedly. Why? Today on Zippy Point.
Quick Zips by Zippy Point.
Quick and dirty. I'm Brock Romanek. I'm a big fan of use. So thanks to Audit Analytics, we can see how the number of comment letters issued by the staff of the Division of Corporation Finance has marched steadily downward for a period of 9 years. It's quite remarkable when you see it in a chart like this, from nearly 3,000 conversations to 550 over this period. So what is a conversation? I had never heard that term used before for this purpose, but I believe it means that a company's recent set of 34 Act reports were pulled for review by CorpFin, and then there was a bunch of back and forth as the company responded to comments issued by the staff. As then the staff issues comments, the company responds, the staff comes back with further comments, and based on those responses and so on, that all comprises one conversation. So this Audit Analytics chart notes that the average number of letters per conversation has dropped from 5.0 to 3.6 letters over this 9-year period too. I don't know if the number of letters counts from both sides, from both the SEC staff and from the company's side. I don't know, and I don't know if it's that important. We just know it's gone down pretty sharply. Anyway, one of the factors for the recent decline is the 25-day government shutdown that we experienced in early 2019. But that, of course, doesn't explain the overall trend over this span of 9 years. And since Section 408 of Sarbanes-Oxley requires that companies get pulled review, the CorpFin screening criteria itself is non-public, but Section 408 sets forth a number of screening criteria for the staff to consider. The one that gets the most attention is that companies with large market caps often get looked at every year, and that's anywhere between 750 to 1,000 companies right there that automatically get pulled for review once a year. Then you have companies with special circumstances, material restatements. The stock price experiences some high volatility. Some smaller companies have price to earnings ratios that are out of whack within their industry compared against their peers. So this is all pretty remarkable that only 550 companies got pulled for review during 2019, when we have at least probably 1,000 companies that did get reviewed but don't show up in Audit Analytics numbers. So what's going on here? Well, first of all, we have the well-documented fact that there's a serious decline in the number of public companies. The companies that file the 10Qs and 10Ks has dropped by almost half since the early 2000s. That's certainly a factor. Then there's CorpFin's move towards a principles-based approach to issuing comments. A huge chunk of companies will get their 34 Act reports pulled for review and never even know about it, because the staff will not issue comments. They'll review it, decide everything is hunky-dory, the disclosure is fine, and they won't even tell the company that you were pulled for review and you didn't get any comments. You got a gold star, but you never received that gold star. It's in your permanent file, in your permanent record. Or the company will get 1 or 2 comments orally over the phone, so there will be no written record, no written comment letters attached to that company's name, nothing for Audit Analytics to track in their annual study. As someone who issued comments over 30 years ago as a member of the SEC staff, and then as an observer to this process for many moons, it's been fascinating to watch this gradual, slow change over the last decade, and how the CorpFin staff processes these disclosure documents, and how their overall importance of that process has changed itself as the impact of it slowly recedes into darkness. A little dramatic, I know. I like to be dramatic. Let me know what you think.